Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, the 28th of May, 2024, 6 p.m. Central Time. Nice to be back from Memorial Day. I was going to put out a weekly edition, and very frankly, I played hooky. I just enjoyed my 3-4 days off from Friday afternoon through Monday and enjoyed it, okay? Every now and then you got to get your brain out of all this. My subscribers all know that on Monday I put out the weekly editions for them in their information, and we were back to normal trading again today. So thank you for that. How would you like to be a Trump juror right now? You've just gone through, at this point, 8 hours of closing testimonies. I'd probably be dizzy. How do you get, with a closing argument by the prosecutor of nearly, 4 or 5 hours and understand anything? I know he's trying to lay it all out, and we'll see what that all means. And 3 verdicts, could be guilty, not guilty, or a hung jury. I don't know. I think there's so much confusing data here. It wouldn't be surprised if, depends what the judge's instructions are, by the way. It could be he's guilty on some things, not guilty. If you can't find him guilty on everything, he's not guilty of anything. We have to see what the instructions are tomorrow. But everybody wants this done, and I'll leave it at that. Now, in terms of markets, I want to remind you, our Memorial Day sale goes in through the 31st. So tomorrow's the 29th already. You're running out of time. Can I make it any easier for you? It is ending in a day or two. If you'd like 40% off any of the courses, this includes my new futures course. I just completed it a month ago, 45 some odd chapters. You get the charting software, access to all my market information, spider stocks, ETF, and futures. If you already have any of those, I add to them so that you see everything. 40% off. The charting course alone, just the charting's $160 a month. I'm giving that off. The course was $600. It's $360. It's $240 off. Doing this math in my head. Then you can also get my other courses, my Enhanced Bollinger Band course, 40% off. Outside Day course, 40% off. And the research, any 1-year research purchase, you can pick up for 40% off, all right? And you might want to read this. If you're a current subscriber, you can upgrade. You can't downgrade to get that, and we honor everything through there, all right? This is a great way for you to kick off your summer trade, which is getting exciting. What can I say? All right. So let's take a look, if we could, next at what's happening tomorrow. We've got the Mortgage Bankers Association coming out with their indices at 6 in the morning. Red Book Group comes out with retail sales. It's been running 5.5 or 6% increases over the previous week and year ago. And that's what it's been running. Richmond Fed will update their monthly manufacturing sector. Every sector we're seeing that's been coming out. Today was Texas. They're not good. The Federal Reserve released their monthly Beige book. That's going to be important because we see how the economic regions are going. And if you read it, you get an idea of inflation, employment, what's going on in the market. And then the API numbers will come out at 3:30 and EIA in the morning, so we'll find out about the energy markets. All right. So today was one of those interesting days where if you take a look at what went on, energies went back up. Bonds and notes sort of marking time. On Friday, we get the PCE indices. Tomorrow's Wednesday, so it's only 2 days away. Another thing you've got to remember, we're going next week, the week after this one, we're into June, early June, right? Well, that means you're going to get the European Central Bank monetary policy decision, and Canada's going to be important. Dollar's wobbling here, but basically in more of a downtrend than an uptrend. You can see the pound was stronger today. In fact, got up to the 128 level. I was pretty pleased with that. In the copper, I've done a copper report and how bullish I am on copper. And if you listen to the metals report that I just completed, I think you get an idea of what I'm talking about there. But let's take a look at what the stock indices are doing. You're flat for the week right now. That's pretty unusual, but you're exactly unchanged on a weekly close-only chart. You can see the market has got a consolidation here. The pattern you can visually see has been higher lows, higher highs. But when you put the swing line on, you see that the market stepped away from that when you had the higher high and then the lower low. And now the market's just, if you will, popping around here as we're going back and forth. I'd be a bit cautious in that. It's not giving you a trend play is what I'm saying. When you look at the S&P index in relation to the 18-day average, it is over it. So the bias is up in the market. There's not a trend per se. You hit the Bollinger Band back here. Do you see right here? And that puts you sideways in this particular case. Now that band is slipping down. There's some pressure on this market is one way to look at it. The interesting thing today was if you were watching the video into the, 1130, 1140 zone today, up dramatically again. It has been on a tear, but it's one stock. Don't get me wrong. AMD went with it, some of the others, but that's what's supporting, if you will, the NASDAQ. Not doing an awful lot for the S&P, as you see. You lost the embedded reading. Normally, before you make a new high over this high, normally, you make a run for the 18-day average. I don't consider that close enough. It could be a bit more yet here. Here's where the strength of the market is because of NVIDIA. Up and away, and of course the other tech stocks that have joined in with it temporarily. Even Apple. Apple sold 1 million more phones in April in China than the month before, and that completely surprised the market. It was a 52% increase in it. So you put those two together and you can see how you start supporting this market. In the Dow, no, this market's been the market that's in a correction. It's already very oversold. But look, this market just went from 40,000 to 13, and before you know it, you're back to 38,940. I mean, it's pretty interesting what's happening. You're at 38,898 right now. So you have fallen back rather smartly in this market. Even numbers often do that. You get to 5,200 in the S&P, it's a fight. 5,400, 56. And 56 is now becoming the new number. Some of the outside firms are saying, oh, that's the new end of the year number. Well, will be. I don't know. How they figure that out is beyond me anyways. Lower highs, lower lows. I see support coming in now at 2046. Which is the 100-day average in the Bollinger Band. And I already have a market that knocking on the door. If it gets down there, it'll be in oversold territory. The trend is down, and it confirmed that today by closing under the 18-day average of closes. You'd have to get over this number to see it different. Then we look at the 10-year notes, lower highs, lower lows, and you can see how the market is down here holding that number and oversold. I think that you've added more yield. An auction went terrible today. They were hoping to get 5.4%. They had to pay 5.53 in order to get it sold. We have some big auction numbers tomorrow. I cover this all in my research. So if you get my full research, I cover the auctions and everything and give you how they're going. In the 5-year notes, lower highs, lower lows also down here. There's nothing friendly. The only thing you could say is the market's getting oversold in these, but yields are climbing again. And the market is doing the job for the Fed. It's keeping high yields in place in all this. When we come to the dollar index, those high yields are not supportive of the dollar. Right now, the currencies that are seeming to get bids are the ones that are going to do interest rate cuts. It's been the euro and potentially the Canadian dollar. Got to pay attention to that. This game changed right here. When this market at the beginning of May, and we're at the 28th, got under the 18-day average of closes, it never capped back over it. It challenged it, but it never was able to do that, stay up and make a move of any type. So it's been acting more bearish than bullish. You'd have to get over 105.05 to get traders to say, aha, that bear part of the market's over. Right now, you could be headed to all this. The lower Bollinger Band, in green, the 100-day average, and the 200 at 103.77. And you're not in oversold condition. In the euro, you're fighting the battle at the 200 and the 100-day averages up to the Bollinger Band, as you can see. Not overbought, not trending either. You have a higher high and a lower and low pattern. That doesn't surprise me. Today was the day I was telling my morning subscribers, I'll tell you now because they already did it, take profit against the upper Bollinger Band, and kaboom, went right there. And they had been in from down here, but another gameplay. And that's because of the embedded reading. So that's the course that you want to take, one of them, where you learn how to come in. You don't see where we came in on this chart because there's other moving averages I place, and you only get to see here part of what I do. You don't see window envelopes, many of the other things that the subscribers see. But this gives you an idea. Gee, does he know what he's talking about or doesn't? If I don't, why watch me? I have a couple of characters that want to write me all the day and tell me how terrible I am. Why waste your ink? I just put you, and I'm not going to read them. I think I know what I'm doing. Higher lows, higher highs. I think the market is sitting here with resistance right here at the 71,000 level. But Bitcoin is acting different than Ether. And I think, remember, I think it's Mt. Cox. Do I have the name right? I think I do. They went bankrupt, and the people that took over, the trustees, if you will, that took over this are starting to disperse the Bitcoins. And I think that flood is like anything else. More of them available might be pressuring this market a little bit. It could be what's going on. Then we look at the differential between Brent and WTI. And this is a market that was at 520. It's now sitting here comfortable at 436. And when you look at what's going on, we are in an area where I know I told you last week, I said, be careful. Now you're coming into support at the 100 to 200-day average in the Bollinger Band. And you tell me that didn't do exactly that, and you've given your pop. Now I'm going to tell you, you're overbought, and you're coming into resistance of the upper Bollinger Band. The same thing is true right here in WTI. And in gasoline, we're getting our bounce. And I think I left you on Thursday or Friday when I think it was Thursday, and I said, okay, are we going to get a bounce here that might carry us right into the Memorial Day holiday? And we did, if you look at it. Now what's next? I don't see an awful lot yet. Closes over 251.90, though, will be treated as bullish. But if a trader were to buy that, he's got to realize he's got the 100-day average resistance coming in at 255. And if you put a stop under the most recent low of 245, you're risking almost 7 cents. That's a big number to be. It's almost $3,000. I'll let somebody else want to play that game. And I'm getting what I was hoping for in nat gas. Remember, we were talking, is this market shot up? And I said, well, now we know we have a base through here, and I'll live with that. And now we saw that the market's trying to get back to the 18-day average, but in its way could be the support of the 200-day average, where the market got over it, got thrown back because of it. Now it's got to make its mind up. Does it make a run for this, or does it start basing out here? And I happen to think we will see more demand come into this market. So I think it's going to get quite interesting. Want to remind you, go to our website for any of these, iraepstein.com. You can always move your cursor to the top up here. There'll be an icon. Give it a click, and away you'll go. You'll be on the website. Education is where the charting courses are. Research is where you can get your one-year research. Remember to click over to yearly from monthly. I'm Ira. You take care.